Higher, with the Sensex and the Nifty nearly hitting a one-year high. The Nifty crossed the 25,900 mark intraday and it closed strong for Samvat 2081. So 0.5% higher on the Nifty. The Sensex, similar story. The mid-cap index also not doing badly at all, fueled by strong private bank earnings that we saw come in over the weekend. And that's the market for us. It's up 4%, even as many other emerging and developed markets have clocked double-digit returns for the year. Surabhi standing by now to take us through the market action. Surabhi, it's the close of Samvat 2081 and all set for the new year.
Well, Samvat 2081 has drawn to a close and it has taught investors a very, very important lesson in equity investing. And that is the lesson of patience, the virtue of patience. And as we get ready to welcome the new Samvat, the question is, will the rewards of this patience actually come through in Samvat 2082? Well, that is exactly the positioning and the thought that the market is taking right now. We've ended the Samvat on a fairly optimistic and positive note, with a lot of experts in the market saying that perhaps this consolidation phase that we've been in over the last 1.5 years, it's perhaps coming to an end. So let's come and look at the numbers first. So the year that's closed out, the Nifty managed a gain of just under 4%. The mid-cap index was absolutely flat. The small-cap index slightly lower, actually, falling about 4.5%. If you look at individual stocks, there was a fair amount of pain. Time correction, if not price correction, really playing out. However, if you look at the sectoral spread, I'll just pick out the best and the worst performing sectors. The worst performing sector, IT, and we all know why, directly exposed to the US. A lot of issues out there. Aside of H-1B visas, aside of all the rhetoric that we're getting from the US administration, just lack of growth, low single-digit growth posted by most of the large IT services companies. So down 18% on the Nifty IT. On the other side, the Samvat that's closed out brought about a brand new sector to invest in, and that was the defense space. The Nifty Defense Index actually ending with gains of about 25%. And again, a near consensus in the market that levels may vary, there might be volatility, but it's a sector that's here to stay. And that was the new investment theme thrown up by the Samvat that's closed out. Now, what were the issues? Why did we have this sort of a lackluster one-year range-bound move? Well, quickly to wrap it up, of course, we had the India-US trade war. The fact that after Liberation Day, we were not the first in line to get the deal as was initially anticipated. We had the India-Pakistan war. We had, of course, this relentless global AI trade that is showing no signs of abating, at least as yet. And that's where the money was literally going. Then we had, of course, FPI selling because India did not have a deep tech or an AI straight-up offer to give to the foreign investors. And therefore, the foreign money was going elsewhere in a lot of the other regional markets in our neighborhood. And then, of course, elevated valuations was a point of concern. However, the tide has started turning in October, and as we, celebrate Diwali, the festive cheer is really apparent, and it's more than just the festive spirit. Let's look at the numbers again. Month to date in October, the Nifty is up 5%, the mid-cap index is up 5%, and even the small-cap index has shown a sparkle of about 3.5%.
Surabhi, many thanks for joining us. That's Samvat 2081. It is behind us. What can we expect in the new year? Listen.